Welcome back to the channel where facts drive the conversation and speculation is clearly separated from reality. If you're here looking for secret revaluation dates, dramatic promises, or sensational claims about overnight wealth, this is not that channel. But if you want honest, grounded, data-driven analysis of the Iraqi dinar and Iraq's broader financial system, then you are exactly where you need to be. Make sure you subscribe and stay connected, because developments in this space move in real time, and staying informed requires consistent, reliable coverage rather than sporadic bursts of excitement followed by disappointment. Today's discussion is not built around hype. It is built around what the numbers actually show, what official institutions are genuinely communicating, and what the current environment truly means for those who are seriously following the Iraqi dinar. This distinction matters enormously, because in currency markets, clarity and consistency carry far more weight than excitement or drama. Markets respond to fundamentals, to policy signals, and to institutional credibility. They do not respond well to wishful thinking or to narratives that are disconnected from verified data. That is the standard we hold ourselves to on this channel, and it is the standard that every informed observer of the Iraqi dinar should apply when evaluating the information they consume. As of March 3, 2026, the Iraqi dinar continues to trade with relative stability against the US dollar. According to official data, the exchange rate is hovering near 1,214 dinars per dollar. When viewed in proper context, this represents a mild depreciation of roughly 0.4% compared to the same period last year. Now, before anyone interprets that word depreciation in an alarming way, it is absolutely critical to understand what that number actually means in macroeconomic terms. A 0.4% movement over the course of an entire year is not a crisis signal. It is not a warning. It is not evidence of structural weakness or impending collapse. In the context of managed exchange rate systems, that level of movement is about as quiet and controlled as currency management gets. The relevant question is never simply whether a currency moved. Currencies always move. The relevant question is how much, how fast, and whether the movement reflects deliberate policy or uncontrolled market pressure. What stands out in the current environment is not the small directional change itself, but rather the complete absence of sharp swings in either direction. There has been no sudden drop, no dramatic spike, and no erratic or unpredictable movement that would suggest stress within the system. For anyone who monitors currency markets seriously, this kind of stability is often far more meaningful than short-term gains or losses. It reflects an environment where expectations are being managed carefully, where policy signals are being communicated clearly, and where the central authority responsible for monetary management is doing its job with discipline and intention. That is not a minor observation. That is the foundation upon which everything else in this analysis rests. A key factor behind this stability is the continued policy stance of the Central Bank of Iraq. The CBI has repeatedly and clearly emphasized that maintaining exchange rate stability remains a top priority. Officials have stated on multiple occasions that there are no immediate plans to adjust the official rate. This message has not wavered. It has been consistent, measured, and deliberate. Understanding why this consistency matters requires understanding what exchange rate stability actually does for an economy like Iraq's. Stability plays a central role in controlling inflation, supporting the import sector, and maintaining the purchasing power of everyday citizens. When a currency experiences sharp or unpredictable fluctuations, prices can rise suddenly and without warning, economic planning becomes extremely difficult, and public confidence in the financial system can erode quickly. None of those outcomes are acceptable to a central bank that is managing a developing economy with significant exposure to global commodity prices and regional geopolitical dynamics. By holding a steady course and avoiding reactionary policy moves, the Central Bank of Iraq is sending a clear signal to markets, businesses, and the public. The signal is that decisions are being made based on data and long-term strategy, not short-term pressure or speculative narratives. This approach is not unique to Iraq. Central banks around the world understand that predictability is itself a form of policy. When institutions communicate their objectives clearly and repeat them consistently over time, markets are less likely to overreact to rumors or unverified information. The CBI's steady and transparent communication reinforces the perception that it is managing monetary policy with intention, and that perception is enormously valuable for anchoring market expectations. In recent months, there has been a noticeable increase in speculation across online communities that follow the Iraqi dinar. Various narratives have circulated suggesting imminent revaluations, sudden policy shifts, or insider knowledge about impending rate changes. These claims are not supported by official statements, verified data, or any credible source connected to actual monetary policy decisions. The CBI has addressed such speculation directly and explicitly, making clear that much of the chatter circulating in online forums and social media channels is based entirely on assumptions rather than confirmed policy positions. This is not a minor distinction. In emerging market economies, markets are highly sensitive to rumors. Even unverified and completely unfounded information can trigger unnecessary volatility, drive speculative behavior, and create conditions that damage the very stability institutions are working to preserve. By maintaining a consistent public message and avoiding contradictory signals, the central bank reduces the likelihood of panic reactions and limits the potential damage that misinformation can cause. For businesses operating within Iraq, the practical significance of this stability cannot be overstated. Importers, exporters, manufacturers, and service providers all depend on predictable exchange rates to manage their costs, set their pricing, and plan their operations. A sudden and unexpected currency shift can disrupt supply chains overnight, raise operating expenses dramatically, and force rapid adjustments that erode profitability and competitive positioning. When the exchange rate is stable and policy direction is clear, businesses can plan with confidence. They can make investment decisions, enter into contracts, and manage their financial exposure without having to build excessive currency risk into every calculation. That kind of operating environment is not a luxury. It is a prerequisite for sustainable commercial activity. For everyday consumers, the benefits of a stable dinar are equally tangible, even if they are less visible on a day-to-day basis. Many essential goods consumed in Iraq, including food, fuel, pharmaceuticals, and technology products, are priced directly or indirectly in US dollars. When the exchange rate between the dinar and the dollar remains steady, households are shielded from sudden and unpredictable increases in the cost of these necessities. Families can budget with reasonable confidence. Purchasing power remains intact. The economic anxiety that comes with rapid currency depreciation, the kind that erodes savings and makes basic goods unaffordable, is kept at bay. In this very direct and human sense, exchange rate stability is not just an abstract macroeconomic metric. It is something that touches daily life in meaningful ways. Looking at the broader economic picture, the CBI's cautious and disciplined stance reflects a sophisticated understanding of Iraq's complex operating environment. Global oil prices, which represent the dominant source of government revenue and foreign exchange earnings for Iraq, remain a significant variable. Regional geopolitical dynamics, which have historically introduced periods of instability and uncertainty, continue to require careful monitoring. Domestic economic reform initiatives, which are still ongoing and incomplete in many areas, add another layer of complexity to the policy landscape. In such a multifaceted environment, avoiding abrupt and unnecessary policy changes is not timidity. It is prudence. A stable and predictable currency environment helps shield the broader economy from external shocks by providing one fewer source of volatility in an already complex system. The role of exchange rate stability in attracting and retaining foreign investment deserves particular attention. Investors who are evaluating Iraq as a destination for long-term capital in sectors like energy development, infrastructure construction, manufacturing, or services delivery conduct rigorous risk assessments before committing resources. Exchange rate uncertainty is consistently identified as one of the most significant risk factors in emerging market investment decisions. When a currency is stable, when policy communication is clear and consistent, and when the central bank has a demonstrated track record of responsible management, the perceived risk of investing in that economy decreases. That reduction in perceived risk can translate directly into increased appetite for long-term investment, which in turn creates jobs, generates economic activity, and supports sustainable development. Local businesses benefit from this dynamic as well. When companies can forecast their costs and revenues with reasonable accuracy over a multi-year planning horizon, they are more willing to invest in expansion, upgrade their operations, and take on additional staff. Exchange rate stability does not guarantee growth on its own, but it creates the conditions in which growth becomes feasible, and investment decisions can be made with greater confidence. It is also worth taking a moment to place the dinar's slight depreciation in proper perspective relative to broader currency market dynamics. A 0.4% movement over 12 months is genuinely modest in macroeconomic terms. Currency values are influenced by a wide range of variables simultaneously. including bilateral trade flows, fiscal policy decisions, inflation differentials between trading partners, global financial conditions, commodity price movements, and shifts in investor sentiment toward emerging markets as an asset class. In Iraq's case, the recent movement appears entirely consistent with normal market adjustments and seasonal variation rather than any kind of structural deterioration. There is no evidence in the data that the slight depreciation reflects a loss of control, a policy failure, or an underlying weakness that should concern serious observers. Followers of the Iraqi dinar should also maintain a clear understanding of the distinction between the official exchange rate and variations that sometimes appear in informal or parallel market settings. While the official rate remains anchored near 1,014 dinars per dollar, minor differences may occasionally appear in local markets due to localized supply and demand dynamics, liquidity conditions, or access to formal banking channels. However, the official rate serves as the primary anchor for the broader market. It sets expectations, provides a reference point for commercial transactions, and limits excessive divergence by signaling the policy position of the central bank. Understanding this distinction helps avoid misinterpretation of localized data points that do not reflect the overall policy environment. Looking ahead, the near-term outlook for the Iraqi dinar appears cautiously stable, assuming that no major unexpected external shocks materialize. The key variables that deserve ongoing monitoring include developments in regional security, shifts in global interest rate policy, particularly from major central banks like the U.S. Federal Reserve, and movements in international oil prices, which have a direct bearing on Iraq's fiscal position and foreign exchange reserves. Any of these forces can affect emerging market currencies indirectly through their impact on capital flows, investor sentiment, and government revenue. However, a disciplined and well-resourced central bank response can significantly mitigate these impacts, and the CBI has demonstrated over recent quarters that it has both the tools and the institutional will to manage external pressures without abandoning its stability mandate. Over the longer term, Iraq's economic fundamentals and the consistency of its policy discipline will continue to shape the dinar's trajectory. Exchange rate stability, when combined with responsible fiscal management, gradual structural reforms, and improvements in institutional governance, can support the conditions necessary for sustainable economic development. Stability alone is not sufficient. It does not automatically translate into prosperity, reduced unemployment, or improved living standards. But it is an absolutely necessary foundation. Without it, even the most ambitious development plans become extremely difficult to execute. With it, the possibilities for genuine long-term progress expand considerably. For those following the Iraqi dinar, maintaining a realistic and evidence-based perspective is not optional. It is essential. Short-term fluctuations are a natural and unavoidable feature of all currency markets. The noise generated by online speculation, sensational claims, and unverified narratives can easily distort judgment and create unrealistic expectations that lead to poor decisions. What matters far more than any single data point or rumor is the broader trend, the quality of institutional management, and the consistency of policy direction. At present, the available evidence points clearly to a currency that is being managed carefully within a defined and transparent framework. The exchange rate is stable. The central bank's communication is clear and consistent. The policy environment is disciplined and data-driven. That combination deserves recognition, and it should form the basis of any serious assessment of where the Iraqi dinar stands today and where it is likely to go in the period ahead. Decisions related to the Iraqi dinar, whether they involve business planning, financial analysis, or any other form of economic engagement, should always be informed by verified information, official statements, and a grounded understanding of Iraq's actual economic conditions. Relying on speculation, on anonymous online sources, or on sensational claims that promise dramatic outcomes without credible supporting evidence is not a strategy. It is a path toward poor judgment and misaligned expectations. Patience, awareness, and a commitment to evidence-based analysis remain the most valuable tools available to anyone following this space seriously. In summary, the current environment for the Iraqi dinar reflects balance rather than drama. The rate is stable. The central bank's message is consistent and clear. The policy direction is transparent and disciplined. This combination supports confidence for businesses, investors, and citizens alike, and it provides a solid foundation for those who are following developments in Iraq's financial system with a genuine interest in understanding what is actually happening, rather than what various online narratives wish were happening. As always, this content is for informational purposes only and does not constitute financial advice of any kind. Staying informed, staying grounded, and staying realistic is the most effective approach available to anyone navigating the Iraqi dinar landscape. Thank you for watching, and thank you for choosing facts over hype. If you value responsible, data-driven coverage, make sure to subscribe and stay connected for future updates as developments continue to unfold.